Hi all. When it comes to automotive sector, rent a car or lease car is one of the most prominent type of business. So in this video, we will be discussing about the transaction-wise VAT impact on such business. When a vehicle is rented or leased to a customer, ideally we collect advance or security deposit. So let's understand the taxability of the initial payment that we are receiving from the customer. It can be either a security deposit or advance or both. So if it is a security deposit is something that is refundable in nature. Therefore, if you are collecting any security deposit, then that is outside the scope of VAT, and therefore there is no requirement to collect tax. In the second scenario, when advance is collected and adjusted against the rental of the vehicle, it becomes a taxable supply. Whatever we are collecting in advance becomes a taxable supply, and therefore we'll have to charge tax and raise a tax invoice. The major revenue in this sector comes from rentals of lease or rentals of vehicles. Let us understand the taxability of rentals. When it comes to rentals, it is 5% standard rated, and therefore we'll have to collect tax and issue a tax invoice. But the most important question, when should we collect tax and when we should give a tax invoice? For that, we'll have to understand the date of supply rules. Date of supply rules is based on three categories. Number 1, when a tax invoice is issued. Number 2, date of payment as per the tax invoice. And 3, the date on which we receive money. So on the basis of these three, whichever comes first will become the date of supply, and on that point we'll have to raise a tax invoice and collect tax and pay to government. So as this is in case of one-time supply. When it comes to a continuous contract, say for example, if it is a contract for 3 months, 9 months or 1 year or maybe 2 to 3 years, irrespective of the period, as per the continuous contract, it states that it should be the invoicing, payment, the point of taxation in this regard should be within 1 year and will follow the same criteria that we have discussed. Now we will be discussing about the cross-charging of expenses. The suppliers usually cross-charges many expenses to the customers. One of the most common being Salik expenses. Salik is a toll fee that the rent-a-car company pays to the government and cross-charges to the customer. When government entity collects Salik fee, they are acting as in a sovereign capacity, and therefore there is no VAT. But subsequently, when it is cross-charged to the customers, it becomes a reimbursement, and reimbursements are taxable in nature. And therefore, we'll have to understand that when we are cross-charging Salik expenses to the customers, it becomes a taxable supply, and we have to charge 5% VAT on it. And also, we have to issue a tax invoice as well. I hope this video gives clarity with regards to VAT compliance requirements. If you have any further doubt, please feel free to reach out to us. Thank you.